Hello, everybody. Good afternoon, good morning, wherever you might be joining us from. Very warm welcome. And thank you for joining us today for this IUCN Academy webinar, Navigating the Nature Finance Nexus. My name is Magda Zahara. I work as a program officer at the IUCN Academy, and I will be your moderator for today's session. And I am accompanied by Erika Namigai, a colleague from the Academy team. So just a few quick housekeeping points before we begin. The session is being recorded, and please feel free to use the chat throughout the session if you have any questions or any difficulties. One sentence about the IUCN Academy. The Academy is a relatively new, launched in 2021 educational initiative of IUCN, focused on strengthening conservation knowledge and practice worldwide, harvesting the breadth of IUCN's 75 years of knowledge, experience, and expertise. And we support capacity building of IUCN staff, of our regional offices and our members, but we also function through our freely available learning platform, offering various formats of training. And today's webinar is designed to give you a flavor of the real experience of what our professional certificate in finance for nature feels like, including expert input, peer exchange, and a chance to meet the learning community. And I am very pleased to welcome our speaker today, Professor Jorge Viñuales, Harold Samuel Chair of Law and Environmental Policy at the University of Cambridge. And Professor Viñuales is the course director of the Professional Certificate in Finance for Nature and brings a strong and very interesting combination of academic expertise and a real-world engagement of environmental governance and sustainability. So Jorge, thank you very much for joining us today. And before we move into the interactive part, I wanted to just give you a few pieces of information about the professional certificate, and I will share a slide. Can you all see that?
Yes.
That's perfect. So the program runs for 5 weeks, starting 11th February to 18th March this year, and combines a self-paced component of the learning with weekly online sessions. And it is designed for a very diverse group of professionals from finance, conservation, and government, the private sector, as well as international organizations. And that's one of the strengths of the program. And today's meeting is designed to give you a small taste of what this kind of learning experience might feel like. Maybe before we launch the poll with a couple of questions we prepared for you today, it would be very nice to hear from you and get a bit of a feel who is in the room. If you wouldn't mind sharing in the chat where you are calling in from, your country, your city, just to get a little bit of the overview of the diversity of today's participants. We are in Switzerland at the headquarters of IUCN, Erika and myself, and Jorge is, I'm not sure where Jorge is today. And I will now launch the poll. If I do this, can you see still the slide?
Yep, you can still see the slide.
Okay. So we prepared a couple of questions for you just to get a feel of where you are professionally, what are your motivations to join us today, and what might be your motivations to join a course like that. And I will give you a few minutes to read through those 3 questions and choose the most pertinent answer to you. And we will not give the results straight away. We're going to have a look and analyze them and get back to them a bit later. Okay, thank you very much for that. And now to set the scene and to give us a short starting point during the discussion, I will hand over to Jorge for a short introduction to the topic that we will be talking about today. Jorge, the floor is yours.
Thank you very much, Magda, and welcome everyone. It's a pleasure to meet you in today, and I see that people are really from all over the world and many different time zones. So thank you for your courage. The point of my very brief presentation is just to whet your appetite and to give you a bit of context of what the seminar and the certificate are all about. So I'll do three things in this very brief lapse time that we have together. First, I will just share some basic estimates of the nexus between nature and finance. They come from the World Economic Forum and a consultancy, McKinsey, that have operated and worked together in this space for a number of years now, probably 6 years, more or less. And the first estimate is at $44 trillion of economic activity. So in other words, more than half of the world GDP is highly or moderately dependent on nature. So nature is fundamental for economic activity and therefore finance as well. And the other aspect that is important, I think, to keep in mind, and this is a statistic that is an estimate that comes from a report of 2025, is that investment in companies between 2008 and 2024 outperform in companies that provide products and services with environmental benefits, what you would call the green economy sector or green economy companies. In that period of time, outperform global equities by 59%. So it is, at least in the medium to a long term, a very profitable investment to take into account the impacts and dependencies of nature. And just moving to a more applied, I would say, example or illustration, you can just think of pollination services. There are a wide range of insects and animals that serve as pollinators. Sometimes you can think of them as the unpaid workers of agriculture, and they are extremely important. Pollinator-dependent crops contribute something like 35% of the global crop production by volume. So we're looking at really a very substantial amount of the volume of food production globally. And we're looking also at a fairly important level of dependency. So 3/4 of all those types of global food crops are dependent on pollination services to some extent. To put a figure on that, the market value, the annual market value of crop production that is dependent on pollination, and that is actually the result of pollination, can be estimated at between 235 and 577 billion US dollars per year. So it is a substantial amount. It is a substantial amount. And the share of agricultural production that is dependent on pollinators has increased, has been multiplied by 4 between the mid-century and 2012. So, as I was saying, this is just a more basic example of the dependency of global GDP and most states' GDP on nature applied to pollinators. And I gave you that example simply because it has been very carefully assessed by a number of financial entities, although it's not that well assessed by a number of real economy companies that are working in the food industry, although it should. So Just moving into the third very brief aspect of this presentation. In order to speak about all this, you need concepts, you need terminology, you need to use the same language that is used by regulation, that is used by data providers, that is used in the structuring of financial products. So just to, again, share with you a number of basic concepts. When you look at nature from this economic and financial perspective, which is just one way to look at it, and certainly cannot be the only way, but when you do look at nature from this perspective, you can speak of natural capital. When that capital is reduced, you tend to speak about nature laws, and there are well-known and well-studied drivers of nature laws, the main being land use change through the destruction of habitats. Now, nature laws translates quite directly in the disruption of the services that are provided by nature. And the term here is a term of ecosystem services. And there are categories, actually there are categories that are widely used and adopted and streamlined. And there are 4 main families of ecosystem services with 22 categories. And typically pollination would be one of them. And that's why I selected the example of pollination. And the relationship between natural capital, nature laws, the disruption of ecosystem services, and the economy, both the real economy and directly the financial economy, is through the terms of what is called dependencies and impacts. A dependency is essentially the impact of a natural disruption on the economics of a company or on the returns of a financial investor. This is the typical example is there is a disruption of pollinators, and therefore there is a disruption of production, and that production makes a company in which you invested far less profitable. That's a dependency, but there is also something called impacts, and that is the actual effect of certain economic activities. You can think of deforestation on natural systems. So you need to consider both, and there is a fairly heated debate between single and double materiality, you may have heard of. And this is, of course, something that is quite central to a debate on the nexus between nature and finance. Now, from the focus on either single or double materiality comes the actual conceptualization of what is a financial risk arising from nature. And that conceptualization of financial risks has been largely borrowed from climate change. So you have what is called physical risks, in this case, a pollination disruption, or you have what could be called transition or regulatory or litigation risks. The labels tend to change, but essentially is the fact that there is a transition towards addressing the physical risks, and that transition may itself have an impact on the profitability of a company, and therefore on the returns for financial investors that hold those shares. The example would be either a massive litigation case, or it could be a regulatory change that requires certain companies, in order to access certain markets, to change their practices. So there is a lot that can be covered by that concept, but this is how these actual dependencies are being taken into account. And then, of course, you have a range of instruments that range from the well-known green bonds to the more recent biodiversity credits, and many other types of instruments. A recent report of 2025 considered something like 25 types of instruments, depending on the nature of the instrument and the return and the scale. There is a tension in the structuring of an instrument between depth and scale. So scale understood mainly as how much funds you can raise with the instrument, and depth understood as how tailored and how impactful that instrument may be. So you see that in broad terms, the nexus between nature and finance is really important. It affects more than half of global GDP, and even in terms of profitability is really important because you can actually get a return which is 60% higher if you invest in the right companies. Then a very simple example is the example of pollination. And then moving to the third aspect, you need a conceptualization, which is a concept and the terminology and the language that is being used in the regulation, in the data provision, in the data providers, and in the type of products that are being provided by those analytics and data companies, and of course in the structuring of products. So I'll leave it there. So it's just a very brief overview of the field, and go back to Magda.
Thank you very much, Jorge. This is a great framing. And I'm going to share my screen again and introduce a little breakout room exercise for everybody. So in a moment, we will place you into breakout rooms of 3 to 4 people for a few minutes, for 10 minutes. And we will invite you to discuss a question. From your experience, where do you see the strongest connection between nature loss and financial or economic decision-making in your sector of context? And as a group, try to maybe identify 1 or 2 concrete examples from your work, sector, country, or just from your observation, if that's not your work on daily basis. You can scan the QR code to get connected to the Mentimeter question, or you can get online and use the code. And we would recommend that you maybe nominate 1 person in the group to keep an eye on time and 1 to type in the Mentimeter. And we'll also broadcast the question once you're in the breakout rooms. So Erica now will place you in the breakout rooms, and if anything, you can just paste a question in the chat. So we'll open the breakout rooms and enjoy your discussion. We hope that you could have a short but meaningful discussion, addressing the question from your experience, where do you see the strongest connection between nature loss and financial or economic decision-making in your sector or context? And maybe I will now hand over to Jorge again to moderate the discussion on this question and maybe pick your brains on it.
Okay, thanks, Magda. So the exercise is fairly simple. I mean, what I'm trying to gather from here is what are the main interests, what are the main sort of focus of interest with respect to the link between nature and finance. We had a grasp of that based on the poll that Magda and Erica shared earlier. And a number of people here are from the conservation community, it appears, and there is quite a lot of interest in how natural impacts are integrated into economic and financial decision making. So I guess it would be perhaps useful just to start with the basics and ask some people to share their views on the interconnection, how they see the interconnection between nature and finance specifically. Anyone wants to give it a try? We have quite a few people in the room. And by the way, apologies, Sheng. We were having a nice discussion, and I was reassigned suddenly, and I know that our discussion was cut short, but hopefully you were reassigned to another group. So
Yes,
anyone wants to give it a try?
Jorge, you can take the floor to discuss that. And if any questions are triggered by this, please feel free to raise your hand again.
Okay, this is the interesting. I mean, of course we had 31%, 64, and 50 in the answers to the poll. So the first question: what is your primary motivation for joining the Finance for Nature professional certificate? And we had two answers that ranked similarly. to integrate nature-related considerations into finance policy and investment decisions, and to strengthen my conceptual understanding of the nature finance nexus. Actually, that's the same answer in a way, because it's not possible to integrate nature-related considerations without a conceptual understanding of the nexus. And the conceptual understanding is not just a matter of empirical understanding, it's how in practice these, certain types of financial decisions affect nature, but you need to populate that relationship with concepts. And the main way in which this is being done is by that idea of single or double materiality. So as I mentioned, single materiality is what you would call dependencies, is to what extent what happens in nature may adversely or positively impact the financial value of a company. And that's dependencies or single materiality. Now, single materiality is very important. Essentially, all the data that you get from ESG looks at that. So ESG is not that much about impact, it's mainly about dependencies. And then on the other hand, you have the issue also important for decision making, which is impact. Sometimes the actual operations of a company have a massive impact on nature, although they may not affect financially the company. And I give you one example. Imagine a company that has a lot of logistics and a lot of transportation, and for whatever reason, that company brings in some invasive alien species. So it moves around the world, and in some of the trip back, it brings in some invasive alien species. Now, that species, once it's seen, it actually proliferates and is capable of killing an ecosystem. So Magda is in Switzerland. The Geneva Lake, for example, has been invaded by one type of mussel that was imported in 2004 inadvertently, and that now has actually, because of the level of reproduction, has now essentially destroyed the almost the entire ecosystem, and is extremely difficult to eradicate and to fight. Even some big universities like the Lausanne Institute of Technology has been trying to fight the proliferation of the mussel because it is disrupting its very infrastructure for research. So whoever brought that, and that may be the case of a company, may face a fine under the current regulations, but the fines that are applied, even for intentional introduction or reckless introduction of an invasive alien species, are capped. They tend to be capped at a fairly low amount. So in the worst case scenario, if you look at the comparison in European countries, in the 28th, I did a comparison years ago on the 28th, the worst that could happen was to pay $3 million, whereas the damage that you may cause is massive. So you see that those kind of things are clear impacts without being necessarily dependencies, because the dependency is quite limited. So this is a very important point. So you need the concepts in order to understand how decision making can integrate the link or the nexus. Now the question 2, in your current role, how does nature most directly intersect with your work? And we have a very clear winner here, 64% through conservation, biodiversity, or ecosystem management. And certainly this is very important. People working in conservation, they are constantly worried and concerned about two things. One is to ensure that there is enough funding for conservation, and the second is to ensure that private actors, commercial actors, are not destroying nature without accountability. So it's a constant concern, and it appears in this crowd. It appears to be one of the main concerns, and how finance can actually play a role here. Well, one of the ways in which it can play a role is through market discipline. Just to give you a very basic example, many institutional investors, and by institutional investors, I refer more specifically to pension funds. So people that have, companies that are actually managing massive funds, that are the funds that come from your pension contributions. Well, those managers, they will not get to manage the fund if they don't pay attention to certain aspects of ESG, including, for example, impacts on nature. Although ESG is mainly about dependencies, there are some institutional investors that are requiring, in order to confer a mandate or to entrust a mandate to some investment company, not just single materiality, but double materiality. And double materiality has to be reported in some of the reporting regulations, such as the Corporate Sustainability Reporting Directive in the European Union, even after the omnibus reform. So even after the regulation that has affected the framework more recently. So yes, this is a major concern. On question 3, which aspect of the nature finance challenge do you currently find most difficult to address? And aligning finance with conservation and restoration outcomes came as a clear winner, 50%. Now, it is indeed very difficult, and we will see the trickier question is how to balance scale and depth. As I was saying earlier, there are a wide range of financial instruments that can be used to strike a balance between finance and conservation. But they are all haunted by some sort of poltergeist or evil spirit, which is the dilemma between scale and depth. Scale means that an instrument is capable of raising very largely a very voluminous amount of funds. And in order to do that, you need to simplify a lot, And by simplifying a lot, you lose depth. So you lose the actual tailor-made nature of the nature positive solution. So there are ways to do it. Just to give you a basic example, the main financial instrument these days is green bonds. And green bonds tend to be issued by governments at different levels, national to municipal, and sometimes by companies. And the actual depth of the green bond very much depends on how those funds are used. And you can structure the green bond to show that, and for example, you would pay a higher interest rate. The value of the coupon would go up if you're not using the funds as you promised. But because you, as a centralized entity that receives the funds, you cannot have control or enough knowledge on how to use the funds in very specific situations. What tends to happen is that the actual fundraiser, so the entity that receives the funds, then reallocates the funds. So opens a sort of hole for fund applications, and many different entities at different levels will make applications to get those funds. And then it becomes extremely difficult to monitor them. Extremely difficult to ensure that they are properly monitored. And also the criteria for monitoring them may be different from one project to the other. Because what we call nature is far less homogeneous, it's much more heterogeneous, it's much more diverse than in the context of climate change. See? And even in the context of climate change is quite difficult. So you see, it's a very tricky question. So I'm not surprised that it actually came up first in response to question number 3. So I think we still have 4 minutes left. So I'll leave the floor to Magda.
Thank you very much, Jorge. Thank you for synthesizing it so well. And we have these few minutes left. Are there any further questions that Jorge could speak to? Anyone? Any last thoughts to share or questions? Please, Nana.
Yeah, thank you. And thanks for the overview. Yeah, I think my camera is not working. Pardon me. I'm trying to turn it on, but yeah, without my camera. Yes, excuse me. Yeah, so in the last question, so this course, I mean, I think it's a very interesting question. The response here, aligning finance with conservation and restoration outcomes. What would you say is the role of due diligence in this? And then, is this something to be addressed in the course?
Yes, thank you for the question. So due diligence plays at different levels, huh? So it can play at many different levels. The second module, so the course is structured around 4 modules. The first is really putting the concept in place, just to make sure that everyone understands the language. The second is a regulatory landscape, and due diligence arises in the regulatory landscape a lot. The third is the data that is itself shaped by the regulatory landscape, because as you may expect, data providers will provide data packages that will allow companies to meet their regulatory obligations. So the regulation itself plays a very important role. And then the last one is all this applied into instruments, the different types of instruments. Now, diligence plays a role, a very central role in the regulatory landscape. It can play a role at just the level of disclosure. So you may say, I'm being diligent in requesting information in the companies I invest in and in disclosing the information about my investment portfolio to potential investors. So say the director of the pension fund that wants to put the money to entrust an investment management company with some portion of the fund. And so diligence has to be in gathering the information and reporting the information. But diligence has to be much more deeply ingrained. This is another recent example. In Europe, there is a corporate sustainability due diligence directive that was adopted and watered down to some extent more recently. Actually, it just applies to fewer companies, and the threshold of application became much more difficult to meet. But the corporate sustainability due diligence directive requires due diligence, not just in gathering and reporting information, but in your actual operations. So you have to be duly diligent in structuring your business model, which means that if you have a business model that has massive impacts on nature, that may be negligent. And that may expose you to litigation, although also the liability and the litigation have been watered down. So it's a very important concept that pervades the regulation, not just of the nature and finance nexus, but more generally environmental law. But yes, we're going to look at that to some extent.
Thank you, Jorge. Thank you, Nana, for the last question. And thank you all for your contributions. Just a couple of last pieces of information on the course itself, and we will share this little deck of slides with you, with those who joined the webinar. If you would like to join us in February, please scan the QR code or go directly to the IUCN Academy website to apply for your seat. The course starting on 11th of February.